Episode 6 of the Forex Success Blueprint is here. You know how we do it. In this episode, I went deep into discussing and explaining the concept of market structure. The knowledge of market structure is very important to anyone who wants to be a good technical analyst. This is the only video in market structure that you will ever need to watch as a Forex trader. I left no stone untouched, so I explained it in such a way that even a CCO can understand it. I also went a step further to explain the concept of BOS, break of market structure, and chalk, change of character. You must have seen those ICT boys trying to complicate chart analysis with BOS, chalk, and FVG. This is that video where I broke everything down. You know how I do it, right? I don't like complicating things because in this forex market, complication is the death of execution. Watch this video to the end, and if you got value from the information I shared in this video, subscribe to my channel, hit the bell notification, and see you on the other side. So you're welcome to this session of Forex Success Blueprint Mentorship, right? In this particular session, we are going to be looking at something that is very important. As far as you are planning to become a good technical analyst, there is an important concept that every person who wants to be a technical analyst in the forex market must know. And that concept is what? The concept of market structure, right? This is market structure. Now, any strategy you use in the forex market, no matter who you are, all strategies in the forex market are built with the principle of market structure, right? Every strategy you use in the forex market, no matter who you are, you must be able to understand market structure before you can make any informed trading decision in the market. So that is why I want to dedicate this particular session for us to break down market structure, right? We are going to break down market structure. We are going to be looking at what we call BOS. And the forex market, there's a term we call BOS, which is break of market structure, right? Break of market structure. We are going to look at it. And we are also going to look at what we call chalk. This is an important concept. This chalk has to do with change of character. Change of character. We look at market structure. Market structure is simply the study of market behavior. Let me put it here. It is the study of market behavior. Yes. This is market structure, the study of market behavior. To a layman, the structure of the market, as far as the forex market is concerned, is the study of market behavior. We want to study the behavior of the market. We want to understand how the market behaves. The way the market behaves depends on how we are going to trade it. We trade each market based on its behavior. That is why you must be able to understand the behavior of the market before you can trade it. The problem that most people have is this. They want to start trading a particular market that they don't even understand the behavior. Now, let me break it down and break it down to a layman. This particular chart you are seeing is a forex market, right? And the market we are talking about here is gold. Now, what is a market? Once you hear the word market, the first thing that should come to your mind is that a market is the place where buying and selling activities take place. Right? In the market, buying and selling activities is what majorly takes place there, right? The players you have in any market is just the buyers and the sellers. Now, let me use a typical market in our local place for an example, for me to be able to bring this message down and illustrate it properly. Now, I'm currently in Anambra State, right? Oka in Anambra State. Now, what is the closest market? The closest market to us in Oka is usually a Koka. Right? Now, let me use a Koka for example. If you are coming from Ebonyi State to visit me in Anambra State, or maybe you are coming to Anambra State for the first time, and then you are told to go to a Koka and buy chicken, right? When you go to a Koka, you are going to be confused because you don't even understand the structure of a Koka market. You won't even be able to locate the place where they are selling meat in a Koka market. Maybe let's just assume that they told you to go and buy chicken in a Koka market. You won't be able to know the particular place where they are selling chicken in a Koka market. Right? You won't even be able to understand the way things are done in a Koka market. When the Koka market open, so you get, if you want to buy meat in a Koka market, what is the strategy you use to buy meat in a Koka market? Now, we are going to be needing someone, right? You have two options. It's either you work with somebody who knows a Koka market very well, that will help you to teach you, show you around, and give you tips on how they buy things from a Koka market, right? Or you take your time to study a Koka market, to understand the Koka market, to even know the location of a Koka market, to even know the strategic places where particular items are found or located in a Koka market, but even know or to know the particular time that is best for buying meat in a coca market. All these things are what you are going to understand about the market. So are the things you are supposed to understand about a coca market so that you can be able to make informed trading decision in this particular market. Now, let us bring it down to the Forex market. Forex market is just a place, a market where there is buying and selling of currency pairs. Now, the particular market where I am in right now is good. The asset we are talking about here is good, right? And I'm in 15 minutes time frame. What it means is that these candles you are seeing here, whatever graph you are seeing here, is representing the activities that is going on in this gold market in 15 minutes, right? And I told you that in a market, you have buyers and sellers. The buyers in this gold market are these green candles. These green candles you are seeing represent the buyers, while the red candles you are seeing represent the sellers. In a normal coca market, I use for illustration. When you enter the market, you are going to be seeing physical buyers and physical sellers. You are going to see a buyer with money looking for a product to buy, or you will see a seller with products looking for buyers that will buy from them. But in this Forex market, right, you are not going to see any physical buyer or any physical seller. The buyers and the sellers you are seeing are graphically represented by the Japanese candlesticks. Right, so these Japanese candlesticks you are seeing here is the graphical representation or the visual representation of the buyers and sellers, and it gives us the activities going on between buyers and sellers. Now, if you come into this gold market right now, you cannot be able to make informed trading decision in this market if you don't understand the behavior of the market, right? You must be able to understand the market structure, which is the behavior of the market. If you understand the behavior of the market, you now know how to trade the market when the market behaves in a certain way. That is why we must study market structure. You must understand the way the market behaves so that you'll be able to trade them properly. You'll be able to make informed trading decision. This is what now brings us to market structure, which is the study of the market behavior. Market structure. Please, we are going to take time, right? Get your pen, get your paper, get a coffee and relax. Let us break these concepts down, because once you understand these concepts, right, every other concept in the Forex market, knowing when to buy, knowing when to sell, knowing how to trade a particular market, depending on the market condition, is all lying on the principle of market structure. That's why I'm going to take time. I won't rush this training so that you understand market structure. Like I said, market structure is just the study of market behavior. You must be able to understand the structure of goods. So now, how do the market behave? The market behaves in three major ways, right? Let me get this thing down so that you have a clean chart, a clean space. The market behaves in three major ways, right? 1, 2, and 3. Each time you open the chart will behave. Is either the chart is trending, this is one way it can behave, or it is ranging. It is ranging. If it is ranging, another way for a ranging market is consolidating. Consolidating. Good. Is that the market is trending, or the market is ranging or consolidating, or you can come to the market and you find out that the market is choppy. Please, I want to take time and say this again. Market structure is the study of market behavior. And if you open any market, there are 3 ways that the market can behave. There's no other way the market can behave apart from these 3 ways. It is either the market is trending at that particular point in time, or the market is ranging or consolidating at that particular point in time, or the market is choppy. If the market is trending, there's a way to trade a trendy market. If the market is ranging or consolidating, there is a way and strategy and technique to trade a ranging market. And if the market is choppy, the rule is that you don't even trade it, right? Have you seen why I said that market structure is one of the most important topics you must be able to understand if you really want to take your Forex trading journey to the next level? Right? If the market is choppy, you are still going to come into that. The question of when should I stay away from the market? When should I stay away from the market? The answer is when the market is choppy. I used to tell my students that you don't need to trade every day. In fact, you trade based on the structure of the market. You trade based on your understanding of the market behavior. If I come to the chart or the market at a particular point in time and I notice that the chart is choppy, the best thing is what? Stay away from a choppy market. Go and play your games, watch movies, relax, do other things, because you cannot make money trading a choppy market. Then if you come to the market and the market is trending, you can trade the trending market in the direction of the trend, and the market is ranging or consolidating. You can also trade the ranging market. So these are the three ways that the market can behave. Now, let us now break it down. Let us take the first one, which is trending. Let us look at a trending market so that I'll be able to understand. Good. Trending market. Please, I'm just slow. I just want to take time because this will be the last and the final time we are going to understand this thing. And after listening and watching these videos, you don't have any need to take any other course on market structure because I'm going to break everything down. Now, if the market is trending, there are two major types of trend in the market, right? There are two major types of trend in the market. I'm going to bring them down. The first type of trend you can see in the market is what? Uptrend, right? If the market is trending, you will see either it is trending up, the one we call the uptrend. Good. Or you'll see the market and the market will be trending down. That is the one we call downtrend. Yeah. I'm going to show you guys an example from the chart. If there's no time and the class ends, you might use another time to share example. Now, there are two major ways the market can trend. It is either it is trending up or it is trending down. And you already know, and I've said it countless times, that when the market is trending up, we are going to be seeing more of green candles. These are the buyers. Buyers are the people that push. Buyers are the ones that push price up, right? And when the market is trending down, we are going to be seeing red candles because these red candles represent the sellers. Sellers are the ones that push price down. We're going to see that a bullish candle usually has its open price below and this close price above. I've already done a video about this. You can go to the previous video I did in episode 1 to watch this if you've not. A bullish candle, right, which is when the market is moving up. When the market is trending up, you're going to be seeing more of green candles than red candles. And when the market is moving down, you're going to see more of red candles because the sellers are the ones that push price down. That is why the open is up and the close is below. It's open above and closes below. Yes, this is the open and this is the close. That is how to know a bearish candle and when the market is trending down. And for the market that is for a market that is trending up, you are going to see the open below and close above. Buyers are the ones that have the power to push price up, right? Buyers tend to keep on pushing price up, while sellers tend to keep on pushing price down, right? This is it about trending market. We have uptrend and we have downtrend. Now, let us swipe this thing out and then talk about uptrend market. Good. In an uptrend market, right? Let me put it down. Uptrend. Good. If the market is trending up, how do we identify an uptrend market? When the market is trending up, the market keeps on making this type of movement. I will show you. Whenever you open your chart and the market is making this type of movement, just know that it is an uptrend market. Yes, good. An uptrend market is characterized by this type of higher highs and higher low movements. Higher high, higher low, higher high, higher low. This is how to know an uptrend market. In an uptrend market, the market keeps on making highs that are higher than the previous highs. Let me make a better illustration here about an uptrend market. Good. This is how an uptrend market moves, right? It keeps on making higher highs and higher lows, right? This is higher high. Some people will even ask me, why is it even called higher high? I've said this thing countless times. This is higher high. This is higher low. This is another higher high. And this is higher low. Good. Now, whenever you open the chart and you see the market making this type of movement, it will make a high movement, then make a low, make another high, make a low. But if you look, you are going to see that this high here, this high the market made here is higher than this previous high. And the low the market made here is higher than this previous low. That is why we call it higher high and higher low, higher high and higher low. And when the market is making this type of movement, right, the higher high movement, this high that broke the previous high is what we call the impulsive move, right? This movement here is what we call the impulsive move. Let me label it this place, right? Just take your time. You're going to understand the concept. This is what we call the impulsive movement. This particular movement you are seeing here that brought about this higher high. This higher high movement is the impulsive movement. Why this particular one, the lower low movement here, is the retracement. Let me label it this side. Yes, this lower low movement you are seeing here is the retracement. This is the retracement move. Nice. And this retracement move can also be called a pullback, right? This retracement move can be called pullback. It can also be called, some people can even call it retest, and it can also be called corrective move. This is for the purpose of what? Learning, right? This is called corrective movement, right? Now, maybe I should now take time and explain. When you look at this particular movement here, this when the market is trending up, it will make higher high, higher low, higher high, higher low. It will make impulsive move, make corrective move, impulsive move, corrective move, impulsive move, corrective move, impulsive move, corrective move. We are seeing that each of the lows the market is making is usually higher than the previous low. This is higher low, higher low, higher low, and this is higher high, higher high. If you look at this type of market structure, it is an uptrending market. And your goal in this type of market is to buy, right? Your goal is to target and catch the impulsive moves. That is what your goal is in an uptrending market. In an uptrending market, what do? You buy. Have you seen the importance of market structure? When you open your charts and you analyze the charts and you find out that the market is making this type of higher high, higher low movement, impulsive move, retracement, pullback, retest, corrective move, impulsive move, pullback, this is pullback, retest, corrective move. That's what this type of movement here is. Then impulsive move. And this type of movement, you see that the bulls are the ones that are in control. The buyers are the ones that are in control. That is why this market the market keep on making highs that are higher than the previous high. This one here, you are seeing here is higher high. Are you getting it now? So this is an uptrend market. And in an uptrend market, what do? You have to buy. So quickly, let us look at the structure of a downtrending market. Now we have another market condition we call downtrend. Good. If the market is trending down, how does the market move? When the market is trending down, we already know that it is the sellers or the bears that pushes the market down, right? The market will keep on making this type of movements. Lower high, lower low, lower high, lower low, lower high, lower low, right? This is it here. Let me just quickly do that. This is lower high, right? Lower high, right? And this is lower low. I'm going to explain it again. It is just the opposite of an uptrend market. This is lower high, and then this is lower low. This is lower high. Are you seeing it right now? That this market keeps on making lower highs. Each of the highs that the market is making here is usually lower than the previous high. Are you getting now? This is a high, this is a high, this is a high. But this particular high here is lower than this one. And this high here is also lower than this high. That is why and how this concept of lower highs came into play. And then this one is what? Lower low. This is lower low. This is lower low. This is lower low. This is another lower low. If you observe, you see that this low is lower than this low, this low is lower than this low, and this low is lower than this low. So each of the successive lows are lower than the previous lows. And this is how to know a downtrending market. So look at the structure of a downtrending market, right? It makes series of lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. Then if this one moves up, right, this is lower high, right? And if it comes down like this, and it breaks its previous low, it becomes lower low. You find out that each of the lows that the market is making is usually lower than the previous low. This is how to know a downtrend market. Now, this lower low movement is what we call the impulsive movement, right? This is what we call the impulsive movement. Just the same thing we did in an uptrend market. This is what we call the impulsive move. Good, impulsive movement, right? Why this one here is what we call the retracement move. This particular movement like this is what we call the retracement move. Remember I told you that the retracement can be called pullback, it can also be called corrective move, and it can also be called retest, if you like, right? It depends on what you want to call it. So this is the structure of a downtrend market. I've explained the structure of an uptrend market and the structure of a downtrend market. What of the market when it is consolidating? We have a market behavior that we call consolidating market, right? Ranging or consolidating market. We call it ranging, or you call it consolidating market. Some people even call it sideways market, right? Some people even call it sideways, yes, maybe sideways market. Now, how does a ranging market behave? That when the market is trending up, we see that it makes the movement of higher high, higher low, higher high, higher low, right? Higher high. Each of the highs the market is making is usually higher than the previous highs, right? While each of the lows the market is making is usually higher than the previous lows. That is how an uptrend market moves. Then for a downtrend market makes this type of movement, right? It makes lower high, lower low, lower high, lower low, lower high, lower low. That is how to know a downtrend market. Right? Then, what of a sideway market or a ranging market? A ranging market in this case makes equal highs and equal lows. All the highs and lows are equal. Ranging market makes this type of movement equal highs and equal lows. Look at how a ranging market moves. Good. If you look at a ranging market, let me do that again and make it clearer. Let me use this. Yes, this is it. So in a ranging market, you are going to observe that all the lows, all the highs, and all the lows are equal. This is what you are going to observe in a ranging market. I get it now. In a ranging market, you don't have higher high and you don't have higher low. All the highs are equal. That is what we call equal highs. Yes, if you see this type of concept in any Forex market, it is called equal highs. Are you seeing that all the highs in this market are equal, right? None of the highs are higher than the other, and none of the lows are lower than the other. Equal highs, right? What of the lows? All the lows are equal lows. Good. This is a ranging market or a sideway market. How do you trade a ranging or a sideway market, right? If the market is ranging, you can sell from the highs and buy from the lows, right? If the market is ranging, look at what you can do. You can sell from here. You can sell from here and buy from here in a ranging market. A ranging market, you can either sell from this place. This is a sell zone. This is a sell zone. This is a sell opportunity. And then this place now are buy opportunities in a ranging market. This is one way to trade a ranging market, right? This is also called a consolidating market. You can sell and buy. You can sell from the highs and buy from the lows. Another way to trade a ranging market is you can actually wait for the market to break out either to the downside, then make a retest, and then you can now start selling. I get it now. Or you wait for the market to break from the upside. You can wait for the market to break to the upside and then you start buying. I get it now. So how can you trade a ranging market? How do you trade a ranging market? If you meet the market and the market structure is ranging, the market is ranging, you can sell from the highs and buy from the lows, or you wait for the market to break out of the range and give you a direction. What it means is that all the highs and all the lows of the market are equal. The buyers and the sellers are in equilibrium. Buy from below, right, which is the support level, and sell at the resistance level. Or you wait for the market to break out and make a retest. You wait for the market to break out and retest or correct before you can now place your buy. Or you wait for the market to break to the downside before you can now place your sell, right? We're also going to spend time and I will show you how to trade a ranging market. But remember, in a ranging market, you can buy and sell from both sides, or you wait for breakouts. If market breaks out to the downside, you sell. If market breaks out to the upside, you buy, right? But there are specific strategies for trading this type of market condition. But just know that a ranging market is tradable. A bullish market, if the market is trending up, you buy. If the market is trending down, you sell. If the market is ranging, you buy or sell. And if the market is choppy, what of a choppy market? You have another market condition that we call choppy market, right? When the market is choppy, what did the rules say? The rules say that you should stay away from a choppy market. You cannot trade a choppy market. The mistake that most traders make is when they don't even know that market is choppy. They will make profit when the market is trending up and then lose everything when the market is choppy. Have you seen a market condition that is like this? The market is neither trending up or trending down. if you meet the market in this type of situation, please stay away from this type of market, right? You have to wait for the market to break out of this choppy condition and give you a definite direction before you can now be able to make any trading decision, right? In summary, what have you been able to understand today? You've been able to understand market structure, right? You've been able to understand market structure, and I told that market structure is the study of market behavior, right? And then we're able to understand that the market can be structurized into 3 ways, right? The market can be trending, the market can be ranging, or the market can be what? Choppy. If the market is trending, there are 2 types of trend. The market can be trending up, right? Or the market can be trending down. These are the 2 ways the market can trend down. If the market is trending down, what do? If the market is trending down, you look for selling opportunities. If the market is trending up, you look for buying opportunity. Right? Because our goal as traders is to buy when we see signs that the buyers are in control. When the buyers are in control, we buy. And when do we know that the buyers are in control? The buyers are in control when they are making this type of higher highs and higher low movements. We know that the buyers are in control, right? Then we sell when the sellers are in control. How do we know that the sellers are in control? The sellers are in control when they are making this type of movements, lower lows and lower high movements, right? We know that the sellers are in control. And then if the market is trending sideways, if the market is ranging, right, we can buy and sell the range, right? Buy when it goes up, we sell. When it comes down, we buy, right? We can buy and sell the range of the market because the highs and the lows are equal. That is how to trade the ranging market. Or we wait for the market to break out either to the upside, then retest, and then we'll buy from there. Or we wait for the market to break down either to the downside, and then we'll sell. Then if the market is choppy, you stay away from a choppy market. Now, the next concept I want us to look at quickly is this. I want us to look at what we call break of structure, BOS. When does break of structure occur? Break of structure occurs either in an uptrend or in a downtrend, right? When the market is trending up, what usually happens? You'll find out that the market breaks structure to the upside. Let me show you an uptrend market, right? Market will make higher high, higher low, higher high, higher low, higher high, higher low, right? Higher high. You see that in this type of market condition, the market is breaking structure to the upside. Is breaking structure to the upside, and the market keeps on breaking structure to the upside, right? That is how to know a break of structure. The market is breaking structure to the upside. Now, let me show you a typical example. When the market creates a type of movement like this, it has created a structure. Then this is where the market makes higher high. Then it will come again, right? And break this structure to the upside and create a new structure. Are you getting it now? Then it will create a new structure, right? And then the market will come again and break the structure to the upside. The market will keep on breaking structure to the upside until it fails to break structure to the upside, and then we'll now start seeing what we call change of character, right? So let me write this so that you see. This is what we call BOS. BOS, right? The market has broken structure. Here you are going to see that the market has broken structure. Here you are also seeing each time the market makes higher highs. Each time the market creates a high that is higher than the previous high, we see that the market has broken structure to the upside. The market keep on breaking structure to the upside. Now, there is break of structure to the downside, right? Sometimes you see the market, when the market is trending down, as far as the market is making lower lows, it is breaking structure to the downside. A structure has been created, right? Is a resistance level that has been created. Let me extend it to the future so that you see the market has created a structure here. Then, when this market trends down and makes a lower low, it has broken this structure to the downside. So this is what we call BOS, break of structure. When the market breaks that structure, right, it creates another structure, a new structure. This is what we call, this is where the market creates what we call lower low. We call this space lower low, right? The market has created a low that's lower than this one. Then you will see that sometimes price will come again. This is a new structure that the price has created. It will come again and break this structure. So as far as the market is trending down, it will keep on breaking structures to the downside, right? That is what we call break of structure. Now, what of change of character? Let me show you. I'm able to illustrate break of structure. Now, that's what we call change of character. Chalk. We call it chalk in the Forex market. Right? This is change of character. Sometimes the market will have to change character. Now, let me show you. When the market is trending up this way, this is how it behaves. Higher high, higher low. Higher high, higher low. As far as the market is making higher highs, higher low, it is breaking structure to the upside, right? A time will come when the market will fail to break structure. Are you seeing that at this point, the market has failed to break structure to the upside, right? And then you see the market breaking structure to the downside. And this is what we now call change of character. Good. Are you seeing it? This is the place where the change of character occurred. Change of character. As you can see, you see that the market has changed character from an uptrending market to a downtrending market. Are you getting that? That is how the market changed character. Now, what you are going to notice is this. Even in a downtrending market, when the market is traded down, it can still change character to the upside, right? The market can be traded down. When the market is traded down, it is making lower highs and lower lows. Lower highs and lower lows. And it keeps on breaking structure to the downside, right? In this case, did you notice that the market has failed to make a lower low? The market here has failed to make a low that is lower than this previous low. So in this case, what happened here? This market formed what we call equal low, EQL, right? Here it formed equal low. This is an early sign that this market might change character, right? Then what now happens? The market now makes a high that is now higher. I guess higher than the previous high. Are you seeing it now that this market has changed character? It has changed character from downtrending to what? Uptrending market. So this is where the change of character occurred. We are going to observe all these things in the market. This is change of character, what we call chalk. Are you getting it now? So let me give you a general illustration of all we've done. All right, here we are going to see, let me change the color. We are going to see higher high, higher low. Higher high, higher low. Higher high, higher low. Equal highs. And you see how the market has started making equal highs. Equal highs. Then the market has broken structure. Good. This is exactly how the Forex market works. Now, we are going to see that in this place, the market made equal highs. Good. Let us label this stuff so that you see. Here, there is higher high. Let me make it capital. Here, there is higher high. Then, there is higher low. Right? And then, here you are going to see that there is break of structure, right? The market broke structure to the upside. Break of structure. The market broke the structure to the upside, right? Here too, the market broke structure. This is what we call, this is another higher high. And here is what? Higher low. The market kept on breaking structure to the upside. This is what? Higher high. But here, after making this higher high, started seeing that the market was not able to keep on breaking structure to the upside. It failed to break structure to the upside. Then it started making equal highs. Good. This is the market making equal highs, right? Equal highs. Then here, these places are equal lows. Equal lows. Equal lows. All the lows are equal. Good. So in this situation, at this place, you see that the market is ranging or consolidating. Then here, the market changed character. Are you seeing? This is where change of character occurred. Are you seeing it? The market changed character. How did it change character? The market made a low that is now lower than the previous low, right? And then this is where your change of character occurred. So chalk, I'm going to label that chalk, right? Because the market has changed character, and then it kept on making lower lows, lower highs, lower lows, lower highs, lower low. Are you getting it now? And then maybe somewhere around this space is not much, the market started being choppy. Are you getting it now? At this point now, you say that the market was what? Choppy. This is very nice. At this place, you see that the market became choppy. As you see now, we've been able to illustrate the market structure. If you meet the market at a particular point in time, you have to take your time, analyze and understand how the market behaves. If the market is making series of higher highs and higher lows this way, it's an uptrending market. You look for buying opportunity. If the market is consolidating, making equal highs and equal lows this way, let me use another color here. If the market is making equal lows and equal highs like it was doing this way, what do? You know that the market is ranging, or the market is consolidating, or the market is really sideways. Then you now know that you can look for your buy from here, look for your sell from here, then buy from here, sell from here, buy from here. Keep on buying and selling within the range until the market breaks out of the range, right? And then when the market breaks out of the range, you see that the market has changed character. The character of the market has changed. Market is no more trending up, right? It is now trending down, and it's kept on making lower lows, right? And lower lows and lower highs, lower lows and lower highs. So it kept on breaking structure to the downside, right? If you see here, you see that the market is breaking structure to the downside. It kept on breaking structure to the downside. So I've been able to illustrate break of structure, change of character, and market structure. All forms of market structure, right? All these things belongs to market structure. Now let us look at the market in our front here, right? This is good. Let's say USD in 15 minutes time frame, so that you see that all will be studied is what happens in the market all the time, right? If you look at this good right here, what do you think is the structure of this market? We are going to see that gold has been trending up, right? Gold has been trending up. Gold has been making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high. Here it made equal low, then it made higher high. So gold has been breaking structures to the upside, right? This is an uptrend market, has been trading up. We usually prefer to go to the higher time frame when checking the trend of the market, right? If you want to understand the market structure and get full information about the structure of the market, you go to higher time frame. I prefer going to something like 4 hours time frame, right? If you go to 4 hours time frame, you're going to be seeing the structure clearly. You are going to see how the market has making higher high, higher low, higher high, higher low. This is the higher high, this is the higher low. Then it is making a new high. It is possible to make a higher low and keep on making higher high until you see that the market has failed to make a higher high, right? If there's a change in character, you see that the trend of the market will change, right? This is actually what we do in the forex market. The forex trader will just come, open the market, we look at the market behavior, right? Understand how the market is behaving. From the information you've been able to get about the market behavior, you know either to sell the market or to buy the market. If the market is behaving bullish, the market is trending up, you look for opportunities to buy. If the market is trending down or the market is selling, you look for opportunities to sell. Then if the market is ranging or consolidating, you can either sell and buy from both sides, or you can wait for breakout either to the upside to buy or to the downside to sell. Then if the market is choppy, you stay away from the market. You cannot make money trading a choppy market, right? You stay away from a choppy market and wait for the market to change direction or give you a very good direction before you can now enter the market. Right now, for break of structure, as far as the market is making higher highs, right? Each of the highs are higher than the previous highs, then it is breaking structure to the upside, right? This is the break of structure. this is a structure was created here, the market broke this structure, and that structure was created here, the market broke this structure. This is what we call break of structure. The market has been breaking structures to the upside. This is break of structure, right? This market, you expect it to keep on breaking structures to the upside. Is this not simple? And this type of market situation, I took trades on gold today and I was making money, right? Because I knew and understood the structure of the market. Gold was buying and I simply looked for opportunity to buy, and I was buying and I was making money, right? That is actually how it works. Now let us look at when gold is selling. Are you seeing that even up to this point, gold has been buying, right? Let us know if we find a downtrending market when gold is trending down, so that you see how the downtrending market behaves. So in this point from here, right, from here to here, you're going to be seeing there was a small downtrend from here to here, right? And as you can see, you see lower lows, lower high, lower lows, lower high, lower low, lower high, right? That's how the market moves when it is trending down. So market structure is very important. You cannot make money from the forex market. You cannot make informed trading decision if you don't understand market structure. So you must try to understand market structure clearly, right? And that is what we've been able to do. Watch this video as many times as possible. Drop your comment, right? Ask your question. That will help to explain more in situations or in areas where you still don't understand. So peace out.